Hello and welcome to another update video about Ethereum. Ethereum has come down nicely as per the primary expectation. There is not much more to add. We reached the next support level at 1754. That was the next target as per this wave count. I'm currently counting this as a 1-2 setup. Yeah, and that we're now in the wave 2. That we peaked in the wave 1 here in April. That was an A wave, a B wave peak here in May. Now we're coming down in the C wave. I'm not going to repeat the entire count because I did that yesterday. But for everybody who's new, that you know where we are. And on the way down now, we're looking at this C wave. It's following the count very nicely. I explained to you there are different ways of how we can count this. I currently go with this count and I haven't changed it, even though an ending diagonal would also be an option. I'm counting it currently as an impulse. It's not crystal clear, but it's okay. It works for now, you know. I think the idea always needs to be, we don't want to break any rules when we use an Elliott Wave count. We want to find the most likely count, but we also don't want to be too academic. It needs to be applicable for practice. It needs to be something we can work with. It's all about, can we use it for practice? You know, I sometimes see people wondering about, you know, how is what is the subwave structure here? It doesn't help you, honestly. It doesn't help you. It just takes you, it just takes your focus away from the bigger picture. So never lose that. I'm counting that as a 1-2-1-2 setup. I highlighted to you yesterday that as long as we stay below 1889, we focus down on lower. Focused here further on the downside anyway in this count because we waited for a third wave down. Now we are in the third wave down now. I think we talked about the 1.618 extension target for the third wave. That's a typical target for a third wave. That's at 1680 roughly. Yeah, we're not there yet. We don't necessarily need to get there, but it would be good for clarity. But overall, yeah, we are in this move down. What I'm thinking about, you know, can we complete this third wave today so that we have another wave 4 weekend? You know that on a Saturday and Sunday we often see a wave 4. Honestly, the majority of waves on a Saturday that we are in is a wave 4 because they are so boring. They are so sideways. They are consolidation waves. And after that much of a drop here in the last few days, I wouldn't be surprised if we just see consolidation on the weekend. So it might be a bit more of a sell-off today and then consolidation on Saturday. Wouldn't be surprised about that, okay? The focus here remains on the downside, especially against that 1889 level. We have come down to support though, so we need to be watching 1754 is holding at the moment. A drop below 1754 would then most likely send us to that 1680 level and eventually down to 1663 in my opinion. At the moment the mindset needs to be, in my opinion, we go down lower until we see a reaction, which would be an initial 5-wave move up and 3-wave move down. Just note that we are now in an area, the yellow box, yeah, it's a long-term area for this larger wave 2 in which we can turn around. For the wave 2, I often say I want the price to go back to the 50% retracement. We are now there. This is typically the first level that gets relevant for the wave 2. Remember, I showed you the 38.2 fib level on this chart as well. I only added that for the A wave because you often get a bounce at the A wave at the 38.2 fib level, which we did, a little bit lower though, but which we did. Now we've come down to the 50% fib level. I don't think the move down is over yet, but just note that as soon as we reach these boxes and these fib levels here, and they are the relevant. Oh gosh, that happened before here. I don't know. Oh, there it is. These fib levels are relevant for a wave 2, and when price hits them, they can always turn around. So just be aware of that. You know, when it turns around, I might not be there to tell you it is turning around. You need to be watching that, you know. What I can tell you that while I record this video, there is no sufficient evidence we have bottomed, and also the Elliott Wave projection would suggest further downside. But just note what I said, that different wave counts are applicable and possible here, and I would not use only the Elliott Waves at the moment in this C wave to try to determine when we bottom. We should also use, for example, these Fibonacci levels. We could be using the idea of scaling in. We are now in a support range. For some people it might be reasonable to start scaling in now, but I'm not telling you to do it. Just telling you this is now an area where reward to risk is favorable, in my opinion, because a third wave rally, which ideally comes afterwards, would take it to, well, $2,500 to $3,000. just before you do anything, understand how that works, where you set your stop loss and so on. We can see here that we are at around 38. That's a little bit higher than on the Bitcoin chart, the relative strength index. But if you also compare it to the 10th of March, where we hit a substantial low, we were just above 30. So we don't necessarily need to come down to 30 to mark a substantial low. Also note that when we turned around on the 10th of March, the MACD was still on the daily not showing yet. So we turned around and only a day later, I think it showed a reduction in negative momentum. Yeah, so be aware of that. These turnarounds, they can happen instantly in crypto. So I'm just saying that, okay, there is not much more to add. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.